But in your view, maybe it wasn't unexpected from some of the air to come out of the big leaders, but you don't think it's over. You don't think that's what it's signaling.
Yeah, Joe, we don't think, this upward move that we've seen for 5 months is over. But you're right. September, October, August, those months historically can be troublesome. An election year, specifically October, is the worst month of the year. So when you talk about, as Mike just mentioned, the NASDAQ 100, it was 30% above its 200-day moving average. It's a little geeky. All that tells you that's the most overbought that's been since like 2000. So it made sense for those stocks to pull back to us, but we're really encouraged by those. What we've all been talking about. Look at it, as we speak, materials are going to open up at a new high, right? Industrial's been doing well. Look at small caps. There are so many more small caps than large caps. They're slowly taking the baton here. And you think about the idea of the cyclical value trade, which so many people talk about. If the economy is getting better, small caps should do better. So that's a group we just upgraded here at LPL Research along with materials. We like those areas maybe for a continuation of a better economy and some continued strength. And again, the market maybe just consolidates, goes sideways. Those tech stocks keep pulling back, but it's healthy, this rotation. We all complained about, tech's the only thing going up. Now tech's coming back and other things are going up and people are still kind of complaining. So you just can't make everybody happy, I guess.
So September is not the greatest month historically, Ryan, but you think that there's some undercurrents that were positive for what we've seen so far this month?
No, absolutely. Just the rotation that we're seeing to some of the other areas. But, Joe, one other thing, just big picture, right? We're up 5 months in a row, record 5-month run. We know all that. You go back to World War II, 26 times the S&P had a 5-month win streak. 1 year later, the S&P was higher 25 out of those 26 times. Momentum begets momentum. Believe me, there's going to be pullbacks. It's not going to be straight up. But when you hear things like that with the improving economic data we continue to see in our view, that suggests, again, 6 months, 12 months from now, when I get to come on with you guys, we're probably going to continue to see stocks outperform bonds, and this bull market will probably still be alive and well in our view.
I don't know, Mike. We're up 60% in less than 6 months. That's historic.
Yeah.
Doesn't feel that great, though. It almost reminds me of the financial crisis. I see people always, Democrats are so great for the stock market. Look at the last administration. When you start at 666 on the S&P, it's not that hard to double it from there, is it? I mean, are either one of these moves that we've seen bull market moves or just retracements of an overreaction to something?
Well, one of the differences this time versus 2009 is it took 4 years to get to a new high because you had been grinding lower and the market was cut in half over the course of like a year and a half. This time, you had 5 weeks down, biggest, sharpest move lower by 34% ever, and then the fastest rebound ever. So this has been a much more compressed episode as opposed to this prolonged market phase. So, we're obviously up at relatively high valuations here. You've come a long way in 5 months, but really not that far either year to date or looking back 12 months. There's nothing that extraordinary about those gains. So I would look at some of the clues inside what's been happening during this pullback, which is credit markets have been fine. They've not necessarily kind of improved that much, but they certainly aren't showing a lot of stress. So, and to Ryan's point, the cyclical parts of the market have been behaving better. So the economic implications are okay, I think, in terms of what's been happening. The question for an index investor or for an index watcher is how much net headway can be made if, in fact, the growthy parts of the S&P 500, which are the majority, it's growth and it's defensives, and if financials don't work, then you're talking about like a quarter of the index you're relying on in terms of being cyclically geared to work for the overall index to try to keep going ahead.